Hello and welcome to Vox Markets. It is Friday, the 10th of February, the Bulletin board heroes, and we're starting off as usual with the FTSE 100, looking a bit tired to end the week with the old resistance, initial January resistance 78.75, so we might find support there below that. Looking at the floor of the channel there from back at the end of September, around 77.50. If we're lucky, then, as I said, 78.80 or so would be the support area, which is basically where we are now. On the upside through 79.50, we've got the chance of 81.50 maybe as soon as the end of next month. But nightmare here would be that we had to go back down to the 50-day line around 76.50. But at the moment, we haven't been below that since the beginning of November. At the moment, we're still looking at the other way to the upside. Bit of bearish divergence there as well, so slightly higher February high below our RSI trace. So that just hints that the 77.40-50 area could be on tap on any break of 78.80 or so. On to the DAX, which has been quite strong during the week, but even here, run out of steam. We had basically a push through that resistance line there from back at the beginning of September. That was around the 15,600 area. We're looking for 15,500 anyway. Above that, we're looking for as high as 16,000, but obviously there may be a break there. Bit of support during the week for around 15,200, and then below that 15,000 are the levels in question. Again, a sort of a bearish divergence situation, so higher highs for February, but the RSI didn't go quite as high this time. And in fact, we've got a little sell signal there with the RSI going below the support there around the 61 level. So a little red flag there. On to the Dow, which was struggling within a range between the 50-day line and the resistance line there from the end of March. So 34,300 and the 50-day line around 33,600. Below that, looking for 33,000. Obviously, there's a bit of a wall of resistance now around 34,300. If we do get through 34,300, then 35,000, then up to 36,000 by the end of next month would be on the cards. But at the moment, it does look a little bit tired, one has to say. RSI just fractionally below the neutral level. So on that basis, you would be thinking the next move here after the consolidation, tight consolidation, will actually be to the downside. On to Bitcoin, which has also been in a consolidation over the recent past. Here we were hoping that it wouldn't go below 22,000, but it has. Got support there at the 50 and 200-day moving averages around the 20,000 level, and that's probably what one has to be prepared for. RSI also below the neutral 50 level here as well, so a little bit tired for all these three, or rather four, major markets at the moment. So we're looking for that 25,000 area to break to give us 30,000 as the best case scenario at the top of that broadening June triangle, but at the moment probably looking for below 22,000 to take us to 20,000. So a bit disappointing. On to the stocks and a couple of requests and a couple of repeats as well. Caspian Sunrise, one of the requests. Here, if you look back, you can see that the shares all but touched that 7.25 pence resistance line projection. We were looking for around the 7 pence area, but nearly got it. Current position is that the recent support around 6 pence, and there's not really much between these levels and that area. So 6.05, the peak last month, and that would be judged as the new support area. If we do break to the upside through the 7 pence area, then probably one would be looking at a line of resistance, which I'm just about to draw now, heading for the I suppose 9 pence area, something like that. So above 7, looking for 9 there on Caspian if there is a new leg to the upside. The reason that we are relatively confident that this bull run will continue is that it's been punctuated by unfilled gaps to the upside. So we had one in November and then one last month. So that is a very strong configuration. It shows that there's a re-rate going on. So the downside hopefully won't be too great. On to a recent favorite, which is Cleantech. Here we're looking for 80 pence. I think by the end of the month, we've got the highs so far around 75.5, so shares still trying their best, and above the old resistance there from back in September around 63, we're looking for 80 on this situation. If you're a fan of the shares and you think that 80 pence is in the bag, there may be a new leg to the upside, something like this. In a narrower triangle, rather a narrower channel, and that could be up towards the 85 pence zone, but let's see if we can get through 80 pence first. In fact, it's going up towards the 95 pence zone, so in a strong trajectory at the moment, but 80 pence the first target, then up to 90 or 95 maybe by the end of next month at the current rate of progress. Let's complete that channel now, so that's the sort of channel that we're in, and looking pretty good. On to Checkit, which I don't see many people talking about, but we've actually hit the target we were looking at, the top of that broadening triangle there from August, so hit that right on the nose and then came back, so that level was around 32 pence level, and ideally we stay above the 200-day moving average of 25 pence ahead of another attempt at not only 32 pence, but then resistance on the way down around the 35 pence level, and ideally that would happen, 35 pence would happen by the end of this month. On to Gattaca, which has gapped up today. It actually broke, who gave us a signal yesterday. People were watching the stock, which obviously I wasn't. Resistance line break there at 73 pence, and above that we're looking for the top of a rising trend channel from this time last year as high as £1.20, maybe as soon as the end of next month. All the while we remain above the upper 70s, that old November resistance, 78 pence, then we are heading or looking to head higher for that. Ixico is the next contender, and here on full gap to the upside through the 50-day moving average earlier this week. So it's a bear trap gap reversal from below the January support at 23 pence. Above 23, looking for initially up to 33 at the 200-day moving average, and then the big picture target maybe 2 to 3 months down the line up to 47 pence at the top of that broadening April triangle, which is on the daily chart. Good performance of late from logistics development, another gapping up stock situation. Here we had the initial February resistance at 14 pence. Above that, looking for the top of that rising trend channel as high as 18 pence by the end of next month, or perhaps even sooner. But good consolidation there above 14, and really looking for that area to hold ahead of a decent move to the upside, probably 18 pence. The minimum we expect there at the moment. Metals exploration is the next contender, and here looking good in terms of that bear trap setup that we had below 0.87 back in November, and then unfilled gap to the upside at the end of last month, and we're building on that. So an end of day close through 1.75 pence could take the shares up as high as 2.4 or maybe 2.5 pence at the top of that broadening triangle, which was in place or has been in place since the summer of 2021. So a decent configuration on that one as well. On to Netscientific, where we can see that the shares are sort of double bear trap from below the 200-day moving average there at 65 pence. Obviously, the initial target here is to fill the gap up to the 78 pence area and retest the peak from last month at around 86 pence. And the overall picture here is that we can head up to £1.10 over the next 1 to 2 months at the top of a broadening triangle from this time last year. The setup there was that trend line break back in October out of the falling wedge. Another near-term favorite is Prospex Energy. Here we're trying to break through the 20 pence zone, still shooting for 22 pence maybe by the end of the month, and that target valid while we hold above the 17 pence area, which was initial January and February resistance for the share. So let's see if Prospex can squeeze a bit more upside for the bulls. News out from Reabold today, and the shares, interestingly enough, gapping up for the second day in a row, which is always a good sign in terms of the technicals anyway. So we gapped up towards the 50-day line yesterday at 0.22 and gone a little bit higher today. Still looking for the upper 20s over the next 4 weeks or so, maybe a bit sooner than that. 200-day moving average at 0.28, so that's our target hopefully over the near term. If we can break through that, which is the first time since basically September, then we could see a return to the 0.45, 0.5 pence area, with the hope of some of that money coming through from Shell. Finishing off with Versarien, which I haven't looked at quite a while, and not a pretty picture, it has to be said. That final horrible bull trap through 22 pence, 23 pence through the August resistance. Current situation, slight indication of bullish divergence. So we've had basically a double bottom there around 7 pence. The upside at the moment, initially up to 9.5 pence. If we can get that, then there's a chance of looking at 11 or 12 pence, which was support on the way down, but still not looking like a very pretty picture here for Versarien at the moment, even though there's a possibility of 9.5 pence over the near term. That's it from me today. More updates over the weekend.